No rate hike for now. That's the message from the Federal Reserve's October statement released moments ago. I'm joined now by Nick Colas. He's the chief market strategist at Convergex. And Nick, welcome. It's nice to have you here.
Great to be here.
All right, so here we are again. No rate hike, but we sort of knew that.
We absolutely did. The Fed funds futures market indicated it very clearly. The market understood this was not a meeting where the Fed was going to raise rates, but they were looking for some pretty good direction of when the rate raise might come.
All right, let's talk about this statement. Of course, we've now come down to really examining each word that the Fed says. In September, they said the Fed was talking about global financial developments and how those could restrain economic activity. This time around, they said they're monitoring global financial developments. How important is that change?
It seems to be one that indicates they are continuing to follow it, that it's no longer a crisis situation as it was, for example, in late August, but one that they should monitor over time. So it seems to be a bookmark for that topic that we're going to hear about again and again. Because
when they say global financial developments, they were largely referring to the slump seen in China and emerging markets.
That's right. They were worried about global growth, particularly emerging market growth, and as you said, China in particular. And I don't think anybody has the confidence to know that that situation is fixed or over, or we're still facing it in Q4.
All right. The Fed also added a small line to the statement referring to its next meeting, which would be December. Does that put a December rate hike more in play?
December is when everybody who follows the Fed closely is expecting the rate increase to happen. They essentially promised it over the course of this year, and so they really do have to address, and I think they did an okay job addressing in this particular release, that they are still on track for a December increase, but it is, again, data dependent.
Data dependent, although the markets are factoring about a 34% probability of a rate hike in December, higher chances in March of next year.
Yeah, that's the fascinating thing. Markets are really fading the Fed is the bottom line. They're taking the Fed with a big grain of salt and saying, yes, we understand what you told us, but the economy is not strong enough and nobody wants this, and so we're pushing it off till next year.
But no matter how you slice it, inflation is still an issue for the Fed. It's nowhere near the Fed's 2% target, and Chair Janet Yellen herself has said many times that it's going to take 2 to 3 years for inflation to creep up back to 2%.
That's right. It's really the key frustration the Fed has right now is inflation isn't behaving as it has had historically with lower unemployment rates. That classic Phillips curve where unemployment goes down and inflation goes up isn't really working because oil prices have come down so far. And that's really gumming up the works inside the Fed thinking about this problem.
So should the question now not be when will the Fed raise interest rates, but is the Fed willing to look past weak inflation and stray a little bit from its mandate?
That is absolutely right. The Fed's got to, at some point, because inflation is not going to happen in the next 6 months to the Fed's satisfaction, if they are going to raise rates, it's going to have to be in spite of the inflation numbers, not because of them, and in the hopes that inflation will catch up and that classic lag of monetary policy will meet right in the middle.
All right, so there's no November meeting. We have about a month and a half until the December meeting. How will the markets trade until then? What are you telling clients?
Yeah, clients are interested in two things. The first is the GDP number tomorrow, which will be fascinating because estimates have come down so quickly for that number, now expected to be only about 1 to 1.5%.
Sure.
And then the jobs numbers the next 2 months. Those will be the key tells.
All right, Nick Colas, we'll leave it there, and we'll be watching. Of course, thanks very much for coming in.
Thank you.
I'm Scott Gamm, and you're watching The Street.